Hey guys, it's Will. I'm going to do another video for the markets. This is Saturday, June 3rd, and yesterday we had quite a good day in the markets because of this job report that came out. If we take a look at CNBC, there was this news article that the Dow went up 700 points on a hot jobs report. The complexity is that there's worries about a recession, but when you have a continuing good, strong jobs report, there's also inflation risk. So they're talking about whether they're going to raise rates in June or July. So some people are saying they're not going to raise rates in June, but they might have to go up a half a point in July. Other people were assuming that a pause was going to be followed by a decline in rates back down again, but I don't think that might happen if there's continuing inflation. So that's the battle. There's a lot of different opinions, and even amongst the experts. And if they raise rates, last time the dollar went up with that, and that would hurt things temporarily, like gold and stuff, and stock market. But let's take a look at the chart. So I use TC2000, as you know, most of you. I suggest you check out the free trial in the link in the description below, or $25 off if you decide to get a subscription. I've had this for years now, and I've got it set up with all sorts of scans and watch lists for different sectors, Canadian, US, inverse ETFs. If we click on watch list here, there's unbelievable amounts of different watch lists built in, different sector indices. It's great for looking at sectors or industries to see what areas are doing well. But in the personal link here, I've got high, dividend stocks. I got leveraged ETFs. So if you want to see 2 or 3x in ETFs, I've got things I was doing, or like if I was waiting if I'm monitoring, I'll put them into a watch list. Like I'm waiting for these to pull back because they're really good stocks or ETFs, but they're not ready to be purchased yet. Or if they're starting to pull back, and then you want to get in when it starts to break through the pullback. There's this guy on Twitter, Puru Saxini. He's kind of a high-tech growth guy. He looks at the sales, and these are early. A lot of times companies that have a lot of sales, but not necessarily profits, like in the stage of their growth phase. And then Adam Koo is an investment guy. He's got a lot of FANG type stocks, but in a variety of sectors. So I can see how they're doing quickly. But yeah, so definitely check out free trial of this program. So one of the first things I look at is the markets. I've got a few other things related to the markets. I've got the US dollar in here, index. I've got basically interest rates. This is 20-year, but it's the inverse. So it kind of reflects interest rates. Like TLT would be the bond. If that goes up, interest rates go down. So this one goes up in parallel with interest rates, but it's for 20 plus year treasury. And then there's a short-term high yield, and then the VIX, which is volatility. So what you'll notice, obviously, I've got it sorted by percent change. IWM, it was hurt pretty bad. It's been in pretty much a stagnant area, but it's been hurt with the banking system issues, because there's a lot of banks in regional banks and stuff in this. So what I like to see is rising bottoms, like higher lows, a break of a downtrend. So if we draw a line, oops, I got those on there already. If we draw a line across here and we break that, when you look at the breakout, you want to see that you've got higher lows. You have a little bit of a higher low here, but not much. But if you decide to get in when you break this trend like this, you put a stop at a recent low here, down here. So even if it pulls back like this, it doesn't get down to that point, so you would stay in the trade. The other way to go is to look at these volatility stops. This takes into account the average true range. So up here, the factor depends, like the location of these dots. 2 means 2 times the average true range. So like it's going to give you that bandwidth. But if you lower that to get a closer stop, then it might switch to red more quickly. So you can make it easier and use recent lows as your stop, like just below that point. So right now we broke through the, if I didn't draw a line here, but oh yeah, I did. So you draw a line, break through there, and you pulled back. Now you've gotten up here and you're above the 200. The 50 is still below the 200, but this is a breakout and you could potentially get in on that. You've still got green volatility stop. So you see the green volatility stop is up here now. So you can use that as your stop as it goes up. But in choppy type of situations, it's not going to be a great scenario. So one of the things that I have is this ADX, which is kind of shows the strength of the trend. So, if you look back here, August, once you cross up above this 20, you're starting to create a trend like this. But down in here, like all this area here, would be avoiding, technically speaking, if you want to follow this. It's not perfect because you do have an uptrend to some extent, but like you start to break up here, but you're down below 20. Once you get up here, like you see it's short-lived, but if this kept going, this would stay up above the 20. So if you want to wait, it's a bit of a delayed reaction. You get up to this point and you do have an uptrend, but like I said, reversed. And then here, it shows it shows above 20, but this isn't really a great uptrend. So it doesn't always work, but it's something just to keep your eye on. The other thing is this MACD, when you get across like this, and then you head up for a while, and then you cross back over up here, you crossed here, you end up crossing back down here. So this is pretty decent. But you get a lot of crosses here. You can start to see it heading up. If you look at the moving average, you can start to see that we're heading up and we're getting close to zero. That's usually where you cross the 50-day moving average. So we're getting up above zero. So another thing that you can use MACD or price percent oscillator is that you want to see it get above zero, and this is where the strong trends would be. But the other option is sometimes you get a really big pullback and you're way down low, and that's a good entry point as well. So, but up above you can see here where we were in this big uptrend that we were above zero quite some time. So above zero is the strong area, but if it comes way down low, it can be an entry, if you want to get in on when you've had a huge pullback. So IWM is starting to look pretty good. Just that big gap up in a big candle. So there's some concerns. Obviously, there's always fears out there, but with the with the interest rates potentially going to be going up, people worrying about a recession, there's some uncertainty there, but things are still looking pretty good job-wise. So we'll see what happens with inflation. So Dow Jones, same sort of thing. We're not quite breaking out there, but supported at the 200. Now we're above the 50. The 50 is above the 200. We have a green volatility stop. So that's a good looking situation. This is starting to turn around, but it's still not great. But you had this low point and a bump. So some people might buy and use this area as a low. See how you have a bunch of spots here? So it's kind of, this time it bounced at a higher point. So there's a bit of a higher low here. But we are in a consolidation phase, but some people can try to ride that up and down trend oscillation there. S&P is looking really good now because it broke out over this point, like the 4,200, I think it is. This is a ETF, but the you can see that when you break through, if you draw a line like this and you get this pullback and you break through and you're seeing higher lows here, like this is kind of a higher low, fairly close to this one, but now we have also higher lows here. So if I draw, if you hold the shift down on TC2000, you get a horizontal line. So that's nice. I got a little palette of tools to draw. So you can see these higher lows. Now we have higher lows here as well. If I zoom in, you can see the volatility stops are green. You could move your stop up to follow that, but if you want to use price action and you use a recent low, then you would be like kind of down this area. So NASDAQ, obviously, I mentioned in a previous thing that was getting pretty high and extended, but like as long as the volatility stops, because you're way up above the 80 MA, and you know, it's very strong, but as long as it's above the green volatility stop, you can stay in. If you start seeing a red volatility stop, you know, or you've got this low, it's kind of it's up high, but there is a low, like where it pulled back a bit. So, I mean, if you want to be tight, that could be a stop, like, you know, below that pullback here and one here as well. This one lined up with the volatility stop pretty good, but so you could use the green and just stay in, but it is getting extended. You can see this ADX, which shows the trend, how high that is. So historically, there was a higher one, you know, there's a higher one in the past here, but this one, you know, it's showing the nice established uptrend here. So that's kind of the NASDAQ, but like I said, a little turnaround with the interest rate right there, bounce there. So we'll see what happens. The US dollar kind of reversed here as well. You see how it had a big down and then this, I don't know what happened here with this long wick, but if the US dollar breaks up over this 200 and this recent high, this is kind of a double top here. Like it's a resistance point. If it breaks up there and the dollar starts heading higher, then that could cause issues with the markets and go, like I said, with gold and stuff like that. Let's take a look at gold, GLD. So you see, we were starting to go up and then it just did a big negative down. So that's not great. You've got a higher low now. I mean a lower high. So here you have, you know, this kind of double top here, and then we tried to, you know, we still have red volatility stops. We're below the 50, so this could be. You can see how this little hook on the MACD. So this could be another down leg. But we have a recent low here, so see if that holds, because that gives you a higher low from that previous one. But it's not looking too great. So anyways, once I look at the markets, volatility is super, super low. Like it just keeps going down. It's at some point it will reverse. It's just, but from there I go to the US sectors and there's some different ones popping up now. So we had the tech, you know, for a while now, the NASDAQ and the semiconductors and AI and what else? That type of thing. It was doing really well, but now we're seeing with the increased job report, probably oil rebounding. If I draw a line, we don't really have higher lows yet, but it did bounce quite a bit with two strong up candles. And this is heading up MACD. And also the moving average has a higher low. So if you look here, you sort of have this trend of the momentum heading up, even if the prices are staying normal. Horizontal, you get this, you start to see an uptrend in the momentum. So, and then there's this water one. I don't talk a lot about water, but you see how we do have higher lows, and we broke this recent pullback here. So that's like obviously 8.5%. That's a huge increase. If you want to look at the stocks inside the water ETF or any ETF, you can click on this little icon here says open component watch list. That's a really nice feature of TC2000. And then you can look at any stock within that ETF. And you could sort it, like it opens up the columns that I have as a default. So I've got like a default series of columns that I like. And then I can sort. So if I wanted to sort by year to date, and then I could look on CNM, MWA, some of the ones that are highest, or I could go 5-day chart, T-Tech, things that are like moved up a lot in the short term. What else could I sort? I've got other columns here where I look at, are they above the weekly? So a lot of these things are above the weekly. If we go to the weekly chart, so if you want to slow things down a bit and not be too in the weeds with the daily changes, you can look for things that have a green volatility stop and on the weekly chart. The other thing you can do, on my chart, I have price percent slope. So slope is kind of like the slope of this MACD or price percent oscillator. So that shows the momentum. So if I want to look at the strongest momentum, T-Tech shows up again, you can see. If I look at MWA, ZWS, this looks good. See, heading up, and it's gotten up above the 200 now. 50 still below the 200, and the 200 is heading downward, but you can see this momentum here. It's heading up. So, you know, if you have a line like this and you're waiting for it to start to break that, and you've got higher lows establishing, you could get in there, or you could wait, see how it comes up, and then supports right at the 50. You got a really close stop there, just below this low point, like, or where the volatility stop is, and now you've got really nice movement there. So that's another nice feature of TC2000. So I suggest you check out the free trial, or if you want to get $25 off your subscription, check out the link in the description below in the video. I'll go through a little bit more on the sectors. So obviously I'm sorting these by percent change. So you've got gaming, you have SLX, which is the industrial stuff, oil, steel. You also have the banks. Like, you had this huge pullback in regional banking. And then it bottomed out down here. And now you're starting to see it above the 50. You've got a higher low established. So 6%, you know, it's a pretty big jump, but so, you know, it makes your stop, if you're down here, a sizable stop, like you're looking at 8 or 9%. But you can see how nice that is when you have this break. Depends how you draw it, but if you draw it here, you know, it's very, like, you're still up above way. If I draw a line way up here, you know, it's quite, but once you get really far down, then you got to start looking for other trends that potentially are broken. like this here, like it got pretty, it's a really ugly looking chart, but you're starting to see higher lows here. So if I sort by year to date, you start seeing Ethereum. This potentially is going to turn around here. You see how cross right at the MACD, and you're starting to poke up a little bit. So that's where your stop would be, like under this recent low. You don't have a green volatility stop yet, but it's starting to creep up here. And then Bitcoin, same sort of thing. FANGs have been the best, unbelievable growth. Like, this is kind of crazy extended, but as long as you're still above these green volatility stops, you know, you could stay in there. But this is a bit of a topping tail. If other things start to, like, everybody focused on tech and the FANGs, which are the Amazon, well, Apple, Facebook, Microsoft, Google kind of thing, NVIDIA, essentially. But with these shifts here now, like I showed you, the oil and the banks, you know, there might be a shift as people get comfortable to go back into those things. And that was when they made a lot of money on the tech, they're going to sell and move into those things. So even though, like, I've got year to date, that's since January, so it's a bit of a long term, you know, it's a 6 month or whatever approach. time frame. So that might not last forever. So if you start going to shorter terms, like I said, you'll see the other things starting to creep up. So like the oil, the banks, the steel, metals, XME, metals and mining. So it's just an early jump here, but if this starts to continue, when they don't see the jobs going down as they thought they would, then the recession, if it's not going to happen, then people will get comfortable back into the oil and the metals and the regional banks and all that kind of stuff. All right, so I think that's it for today. Like I said, you can click on here and go into the stocks for any of these sectors and drill down if you want to get into stocks instead of ETFs. I've got an inverse ETF. I've just kind of built these up myself. They're obviously not doing great because the markets are doing pretty good right now. But there's so many things that you could do to set up your charts the way you like to. I've also got tabs down here with different sort of views. Like I've got just moving averages. I've got naked chart with nothing on it. I've got Heikin-Ashi. I've also got, like they come with fundamentals for like investors. Like if you want to look at the sales and price to earnings and all that stuff. I've got financial analysis sector by year. So if we look at one really quick way to look at sectors, if you go to HA, Heikin-Ashi sectors, I put 9 charts here, which is the different sectors, most of them. And I can quickly look, like you can see that these are in a downtrend. Maybe they're just starting to poke up, but obviously you look at this one, you're like, oh, look at this. That's a spider, consumer discretionary. And this one is the technology. So those are the two that stand out, right? Like you can see how good they're looking. Now you're starting to see other ones that did a big pullback. Consumer staple, you got a little green candle, but it's still red. A pretty flat banking, but maybe turning around because it's been consolidating. A pullback in the energy, but just a big basic beginning of potentially a turnaround with a lot of support at this level here, but it's still early. Industrial, same sort of thing. We had a really flat sort of consolidating period. Big candle for this day, but we'll see what happens. This is a big pullback in the healthcare, just a little bit of a turnaround. So this is a quick way to see, like after you get a pullback and a flattening and then you start to see it heading up, like here potentially, you can get back into those sectors. So right now, you like I said, discretionary and technology look really good. And then over here you got real estate. Now this was pretty flat, had a bit of a, basically flat, pulled back down. And now, green, but it's still early. But the beginnings of, maybe a turnaround, we'll see. But, obviously, when you see these uptrends, like in technology, it's a simple way just to ride that up if you want to look at like the 50-day or whatever. So you can see at a quick glance which sectors are doing well. There's also a table that they come with sector by year. So if you sort by sector by year, you're going to see that technology. So these gives you consumer cyclicals, industrial, metals, healthcare, defensive, real estate. And the nice thing with this is if you looked at technology, once you click on that, then you get down to industry. And that's also, because I sorted it by year to date, semiconductors, internet content. So right away, you can see the sectors that are doing the best. And then if you go like semiconductors and then you drill down, GSI is actually better than NVIDIA, and then NVIDIA. So this is like an incredible way. If you want to look at internet content, then you get into these companies. I should probably talk about this more in another video, but you can see how Meta is doing so well. Just a nice smooth uptrend. Spotify, stuff like that. So if you really want to get into finding the best things, you can go down the second best one, which is consumer cyclical. Then you see gambling, And then you see down here DraftKings. So right away you're going to find the best performing stocks. Residential construction. Look at this one, Dream Finders. I mean, that's just a really smooth uptrend here. So this is a great chart. It's called Sector by Year. If you want to see those, you go over here on the right. There's a tab saying New Layout tab. And then you're going to see all these sort of pre-built ones. And there's one over here called Sector by Year. Drill down. Fundamentals is all the analysis, fundamentals about the stock. And so that's good enough for today, I think. Hope you enjoyed that. And we'll talk to you in the next video.